If you have new valuations coming out, you may see a huge drop in the value of your company.
Absolutely.
It's a great opportunity. If you believe in your company now, if your company was exposed, and not just didn't take a hit just because the whole market took a hit, but it was exposed for being weak.
Yeah.
Maybe you don't buy that stock.
Yeah.
But if you think your company is just as strong as it was, it's just part of the market cycle. Gosh, it's such a fantastic time to buy for little or no tax. Go out and do it. Even if you don't have the cash right now yourself, there are lenders out there.
Hello. Welcome to another knowledge bomb episode of Lead to Greatness, where we believe in helping others reach their greatest potential and together change the world. Today on Lead to Greatness, we have Rubin. If this is your first time joining us, please consider subscribing and hit that notification bell and hit that like button. This will be greatly appreciated in helping getting out this content to great leaders and great individuals like yourself. Aaron specializes in finance, real estate, and tax preparing with an extensive background in financial services. Please help me welcome Aaron with earning stock options in business. This is Cedric Francis, and you're listening to Lead to Greatness.
I help people make really good decisions about their stock compensation. I exist at the corner of taxation and investment and wealth. What my passion is, I love helping people keep more of their own money and then do good with their money as well. It's sort of like a tapestry. You can't pull one string and just expect the whole thing to stay in place.
Right.
It's the tax piece, it's the estate piece, it's the investment piece, it's the charity piece. It's that all that stuff. It all fits together, and you can't ignore any one of them because they all interact.
Wow. So how did you get into this line of work?
I think like all good entrepreneurs, I'm by luck, by chance. I went to college and I was an undergrad in accounting and Spanish actually.
Mm-hmm.
And then I went to University of Illinois for law school. And while I was in law school, I was fully intending to be a tax attorney, and met my wife while I was there, and her family business, was doing that investment, wealth, and tax piece. And so sort of my background, just sort of fit perfectly into the whole thing. I looked at my path, which was tax attorney, which of course is a very, very noble profession, and you can do quite well, and intellectually stimulating, all that good stuff. Right. You work insane hours, but you do a lot of good. My father-in-law, who he golfed like 3 days a week and had like this really awesome house in California, and I thought, and he didn't work 100+ hour weeks, like all my friends in law school were going to. So I said, you know what? I think I'm going to change my path a little bit. It was, and I tell people that, in law school, everyone thinks you learn the law and you don't really. To me, I think you learn, how to be pragmatic more than anything, and how to shift, when things happen. And so you just have to take the opportunities as they come to you. So
let's talk about some mistakes that you see investors perhaps make.
Yeah. So again, in my world, I see sort of two different kinds of mistakes.
Okay.
The first one is people who, they have stock compensation, they have options, and they don't realize that by buying the option, they're creating a taxable event. They just don't know. And I can't tell you how many people that have come to talk to me about their planning needs and kind of where their company's going in the IPO, which may not be happening for a year or two. And I said, well, tell me about your options and kind of how you exercise them. Oh, well, I just exercised them all this year. Really? How many do you have? Oh, I had 100,000 shares. All right, that's nice. And how much you have to pay for them? $1. How much are they worth? 20. You have a tax problem, and they can't sell it because it's not public, or it's harder to sell. I should say it's harder to sell when it's not public, and they make the mistake of doing an action before talking to the right professions, and so they'll paint themselves into a corner where they have some serious some cash flow issues. So that's sort of the one thing is on the stock option side is making that decision before you've talked to the right people.
You mentioned options. For someone that may not know what you're talking about, can you explain that to the community just before we continue? Somebody probably listening right now, like, man, I'm lost already.
Yeah. So stock options, which are more and more prevalent, in compensation packages, not just in California, but there's, I know you're in Houston, but certainly like Austin, Texas, there's tons of tech down there, and it impacts a lot of workers, as well as the tech triangle, on the East Coast. New York's seeing a lot more, but so what stock options are, they're the right to purchase stock, and that could be privately held companies, it could be publicly held companies, and you have a strike price, which is what you can buy it for, and you have a fair market value. Fair market value is either determined by the market, which is if you're public, or by an appraiser who comes in and says how much the stock is worth if it's not public. And so there's a difference between what you're going to pay and what it's worth. And when you buy that stock option, either that difference, hopefully it's a gain, that difference, that gain is going to be put onto your W-2 into your compensation, and you're going to be taxed on it there, or it's going to go on a different part of your tax return and you're going to be taxed on it there. Yeah. But you're going to pay tax when you choose to buy the option. Yeah. You're going to pay some tax. The other mistake, that I see, again, from an investment standpoint, is not thinking through some of the tax consequences, behind what you're doing. And that is, you can structure your portfolio in a way that takes advantage of the natural movements in the market to get you some losses to offset gains. Or you can sort of blindly go in and just say, well, this looks just as good as any other. But there are differences in strategies that can make huge impacts, on your tax return. And when you're talking about what your return is on any investment, real estate, stock, whatever it is, it's all about how much you get after tax. I mean, if you're not figuring that out, you're losing a huge percentage of the picture and of your money, and you really have to think through those decisions before you make them.
I want to talk about WRP. What inspired you to begin this journey and why?
So I joined my father-in-law, 13 years ago, and I've been working, in the industry. And I think, up to several years ago, we were sort of that, I'll say classic type of firm where it's, you got $500,000 in a pulse, come on in, and really an untargeted, I'll say undisciplined, sort of way of doing business. And several years ago, when Zoom went public, we had a bunch of Zoom clients that came in from a referral source, and we realized they had this huge need, of tax and the wealth and charity and all that. And at that point, we had actually started to wind down our tax practice. We'd had a tax practice since my father-in-law started the business, 30 years ago. We'd started winding it down, but as soon as we saw what was happening, with these Zoom clients who needed so much tax support as well as strategy, on sales side and all that, we looked at it and said, we can't possibly shut down the tax department. As a matter of fact, we have to expand it. And from there on out, we sort of realized, the people that we help the most are the people in tech who have these stock options. And it was great because obviously we found our niche, which is difficult to find sometimes. But we found it, we got passionate about it, and it's all we talk about now. And if you go to our website, that's what you're going to see. We talk to people in that situation, and that's who we're looking for. And I think before we started that, when I was sort of giving my pitch, and we all have a pitch, of some sort. Right. We all go out there and we try to tell people what we do, and I would tell people what I did, and I'd be unconvinced. I didn't convince myself that what I was doing was interesting or noteworthy. Yeah. And so I said, geez, if I'm not motivating myself, I can't possibly be motivating anybody else. Yeah. And so as soon as I switched to, hey, I'm focused on this group, these are the people that I help the most, all of a sudden I got excited. and when I told people what I did, I was excited to tell them what I did. And when they hear people that have those sorts of problems,
Yeah.
they think of me, right? And because not a lot of people do what I do.
Yeah.
And so I think that was a real turning point, I think, with the firm, is that all of a sudden, we all found, our calling, for lack of a better word. And it was just no looking back, from there on out.
We have like the stock market right now is not doing too well. I mean, we're in what called a bear market at the moment. So with the market tainting like it is, I mean, it's been dropping since January. And at the time of this recording, this is 2022. So at this time, the market is dropping down. It's getting lower and lower. So what advice do you have for people with, let's say, pre-IPO stocks?
Sure. So first advice for anyone is stay calm and buy.
Just say that again. You got to say that again. Say that again.
Stay calm and buy. And I say that, a little tongue in cheek, but the truth of the matter is there are stocks, especially, I mean, the NASDAQ right now, I don't know if it's down 30% again, but it sort of had a little bounce back last week. It's down, let's say, essentially 30%, right? So it's 30% cheaper to buy NASDAQ stocks in general than it was 6 months ago.
Yes.
Will the NASDAQ stay down forever? I don't think it will. It certainly nothing has ever stayed down forever.
Absolutely.
What will the path it will take? Will it take to get back to where? I have no idea. I mean, that's a harder one to say, because, we see a lot of pressures, in not just from inflation, but the response to inflation, and the Fed making its policies. So, first for everyone, stay calm and buy. Is this the bottom of the market? I have no idea, but I know it's a lot better than it was 6 months ago. That I can tell you for sure. We only have hindsight. Anybody who says they have foresight is lying to you. So if I can look in the past and say, like, all right, I got deals going on today, it might be a better deal tomorrow. I don't know. I'll buy more tomorrow if I can. So that's sort of the first thing. In that pre-IPO world, it gets a little trickier, because what happens is your stocks aren't valued every day. And that makes it hard, because sometimes the valuation that you're going to buy the stock at, right? Because we talked about, you have that strike price, which you're buying at, you have the fair market value, which is done by an appraiser. Oftentimes it's only done once a year. So you can still be operating under a valuation that was done in December or January last year, which said, your company was worth, $3 billion, who knows, but you got an inkling that today it's worth a lot less than that. So your problem with buying pre-IPO stock today is that the valuation might not be accurate, and you got to be very careful, with that. That being said, if you have new valuations coming out, which hopefully we should it soon, you may see a huge drop in the value of your company.
Absolutely.
It's a great opportunity. If you believe in your company now, if your company was exposed, and not just didn't take a hit just because the whole market took a hit, but it was exposed for being weak. Maybe you don't buy that stock. But if you think your company is just as strong as it was, it's just part of the market cycle. Gosh, it's such a fantastic time to buy for little or no tax. Go out and do it. Even if you don't have the cash right now yourself, there are lenders out there, where it might make sense to do that right now. Again, valuations being low, it's a great time. So yeah, I'd say, be cognizant of that. And if you can start early exercising stock, even better. Which is a great opportunity, if you can do it.
I want to talk about that. What should people do if they don't have the money?
Yeah, so there's some great resources out there. I like to remind people is that if there is a cash need, there is a lender to fill that need. Now the question is, how much are you going to have to pay to get that money? And that's where it can become expensive. But there are outfits out there, they lend, they'll lend you, let's say you need $500,000 to buy the stock, and pay the tax, right? Because usually it's not the purchase of the stock that gets people, because if you're talking about, especially if you're early in a company, it's 10 cents a share, it's 100,000 shares. All right, $10,000. Most people working in high tech who's got a good job, they can probably scrounge up $10,000. That's not the problem. The problem is the tax is that when you do that, you could be looking at, at a, a $500,000 gain, which could be, as much as, $250,000 in taxes, and that not everybody has. And it could be even bigger. And so, there are lenders out there that will do it. Now, usually they'll charge, everyone charges ticky-tack fees, but they have the ticky-tack fees, and then they also have like an interest rate charge, which as of several months ago was, in the 6% range. I'm going to guess it's gone up since. And then but where they get you is they take a percentage of the shares. That's where they get you. So if you exercise, usually it's somewhere in the 10 to 12% neighborhood, could be 8%. And they underwrite all this stuff, right? So they make a decision on the risk factors. So if you're exercising 100,000 shares, you can expect to give up at least 10,000 shares to the lender. That being said, if your tax savings is great enough, it will pay for itself. And so again, it's if you don't have it, there's some great resources out there. There's even, I know a guy who he actually started a business where he actually will evaluate the different choices that people have with their stock options and kind of tell you what your best choice is. And sometimes it's not lending. Sometimes you sell the shares on a secondary market and you buy the shares outright, the rest of the shares outright. The permutations are endless. And this space is it's so amazing. As I said, I work with really smart people, much smarter than me, and I refer out all the time, just because, you got to deal with experts on this stuff.
What are some other options and tips that people may not know about, that you can share with us on today?
Yeah, I think the biggest thing that people don't know about is probably what's called the 83B election. And the 83B election, again, it's used for lots of different things, but in the stock options world, you can do what's sometimes called early exercise. And that means that even though your stock's not vested, you can put up the money and tell your employer, hey, I want to prepay for all this stock that will eventually vest.
Oh, wow.
And that's going to come to me. And at the same time, and within 30 days, there are tight deadlines on this. You can send a letter to the IRS that says, hey, I purchased this stock ahead of time. I want you to tax me on the stock that I purchased that I technically don't own. Right now, so you gotta let that swim in your mind for a second. It's like, wait a second, you don't own it, but you're gonna own it, and you're telling the IRS that you don't own it, but that you really want them taxed like you do own it.
Yeah.
So it's a little complicated at first, but the benefit of that is that when you're granted your stock options, almost always there's no difference between what you're going to pay for it, that strike price, and the fair market value. So it's zero. There's no gain. So you're going to turn around and tell the IRS, hey, I want you to tax me on zero. IRS says, all right, I'll tax you on zero. And then as the stock vests, even though the value of that company is going up, perhaps even dramatically over time, you're not going to pay taxes on the vesting. Now, when you sell it, you're going to pay tax. Don't get me wrong. You're going to sell it. When you sell it, you're going to pay tax. But as you buy it, you don't. And that's a huge advantage. And a lot of people don't know about it. And there's a lot of companies that won't let you do it, which I don't understand. But I think part of it is, is how companies are founded, and oftentimes they're on a budget and they're not thinking through some of these decisions.
Right.
So if you're an entrepreneur out there and you're starting, a new company, do your employees a favor and allow for early exercise. But always, when you start a new gig and you're getting stock options in a company, especially if it's cheap to exercise, always ask your HR people, hey, can I early exercise this? Because if you can spend $1,000 right now or $10,000 right now and save yourself hundreds of thousands of dollars in the future, if you really believe in that company, do it every time.
That's amazing. And that is a knowledge bomb. Wow, that is some great knowledge for us, great knowledge for the community on today. And I was thinking about it because there's somebody maybe listening right now and maybe thinking about all this and thinking about it, and all they see is risk. All they see is the fear of it, the fear of putting into something where taking a loan out to get, that can be in some people's mind, that can be kind of a scary thing. You talked about what the lender is going to pull out, maybe 10%, but in my mind, I think giving up 10% versus not having no percent because you literally didn't have the money to do it. I think that's a win-win, and that's a way to leverage your credit or your loan or whatever. What's your thoughts on that, or how can you add to that statement?
Yeah, it's one of those things where you work with the right professionals, and when you go to these companies, and I can name off the top of my head for you if you want to, they'll give you spreadsheets and they'll say, hey, if you exercise at this, and the price goes to Y or Z, this is how much you benefit. And they'll show you that. Now, there's a break point. If everything's now, if you put your money in and everything just stays flat, it didn't work out for you. But it doesn't happen terribly often when you're talking about a pre-IPO company.
Yeah.
Again, it's a risk though. And the great thing about some of the lenders out there is that it's a lot of it's non-recourse, and that means that the lender cannot come back to you to collect money that you may owe. So let's say you're at a company, $400,000 you borrow from to pay the stock and the taxes, and once by the way, most startups don't make it. Right. I mean, everyone's got to know that most startups don't make it. So you take the money from the lender, wouldn't you know it, you're one of the ones that don't make it. So that $400,000 that you got, you don't owe that back. That it's non-recourse, right? Now you paid a lot for that. Hypothetically, right? Because it's a risk that the lender took. But you don't owe that money back. It's mitigating your risk, right? It's letting someone else take some of that risk. Now you're giving up money, right? They're taking risks. You're giving money for that risk. But again, for a lot of people, it makes a lot of sense. They don't want to take it. They don't want to put up their own money. That happens sometimes too. I have clients, they could put out a couple $1 million to buy their shares. They don't want to, and there's a lender out there want to take it.
Yeah.
So you do it.
Term OPM, other people's money.
Yeah. Oh yeah.
Other people's money, OPM. I mean, that's if you making somebody some money, they definitely guarantee that next time you ask to borrow something, they're gonna be excited and ready. Matter of fact, they probably call you and say, hey, you need something, because that's how they make money. So definitely. I want to talk about the pitfalls for people with the stock options.
Yeah, well, I think the biggest pitfall is that most companies don't go public, right? Now some of them get acquired, and that's why they don't go public. But some, you're going to put money in these stock options, especially if it's your own money, and it'll be gone. Yeah. And we talk about the 83B election a little bit before. Let's say there is a difference between the strike price and the fair market value, and you pay tax, on that. The IRS is going to say, well, we're giving your money back because you prepaid the tax. Tax is gone. They're not giving it back to you. If you exercise certain stock options, sometimes they're what's called a deferred tax, and you can get credits later on, but it's a much slower burn to get the money back. So it's either sometimes you're not going to get your tax money back at all, or it's going to take a long time to get back. No one likes that. No one likes that. And obviously, in any money you put money in a single company, your risk is on that company, right? If you were buying, the S&P 500, right? Is all the S&P 500 going to go to zero tomorrow or the next day or any day for that matter? No, they're not. How about your company? How about the company you're working at that isn't public yet? Oh, right. There's a chance. There is a chance. Yeah. And it could be your money's locked up for a really long time. Think about people that started the company, years before you did. Some people, they bought their stock 5-6 years ago, and they're waiting for the return. Yeah. There are investors. There's people that have the seed money in the company, right? They're waiting. I mean, you're waiting as long as it takes, and the runway for public companies or going public now is way longer than it was, a decade ago. They used to call unicorn companies unicorns because you almost never saw them. Nowadays, there's dozens and dozens of unicorns out there. Wow. There are decacorns, right? There's $10 billion companies out there. They're not even public yet. Yeah. So again, it could be, your fate is tied up in the leadership when they decide to go public.
And I think I would recommend anyone from Lead to Greatness listeners to get with an expert, someone that know what they're doing. So you won't get caught up and you won't lose or make any bad deals, bad financial decisions. So I want to ask you this, Aaron. If someone was to work with WRP, what can they expect?
So I think there's a couple different engagements to do.
Okay.
We some people come into us, they're a couple years away from IPO, or acquisition, right? They just got their D round or their E round. And for those people, they need to make important decisions still. They may not have money to invest right now, which typically happens. And so, we work with people like that. And what happens is when we do take on a client, they get, the full suite of services, that we offer. We do, planning. On the tax side, we also have a tax firm that we prepare tax returns and we do tax projections. And for some people, it makes more sense to work with the tax side for now. And it's one of those things where we talk about that. Some people, and that happens. I've worked on both sides of it. Where someone says, "Well, geez, I don't have any money. There's really no complication in my life because, I'm not really going to sell this. Can you just help me with the tax?" Absolutely, happy to do it. Or some people say, "Gosh, I've not only am I worried about this this IPO thing, but I also want to make sure that I'm on top of other parts of my life. Whether they have other investments or whether they they're thinking about retiring, whatever it might be, on top of the IPO process." And oftentimes we'll engage earlier, sooner rather than later.
So what areas do you all service?
Yeah, so it's mainly obviously U.S. Our clients, they almost all were in California for a time, and they've since spread out. There's a bunch of people in Texas, recently. So you've probably seen some high tech people come your way out of California.
Absolutely, daily feel like.
I don't know if I should apologize for that or not. I'm originally from the Midwest, so I'm a transplant myself. But and they've gone to Washington and Oregon and Idaho and a couple to Tennessee and some out to Florida. Again, it's and obviously Nevada is popular here because it's so close to California. But so again, we've definitely spread out. We don't really work with non-resident aliens, just because there's a lot of issues, cross-border issues that we can solve for. And so, and by the way, there's some great firms out there that do the Canada US thing, and they're specialists in it, and you got to work with that. You got to work with those people. We haven't had a lot of requests, from sort of anywhere else. Some of our clients are on temporary assignment in other countries, and we can help out there, because they're still subject to U.S. taxation. But once you get far afield, it's like, again, we're specialists in what we do. We're not gonna step out over something that we don't know.
That's good, but I like you said that, because we do have listeners that are overseas and in other countries. So if you don't provide the service, you can point them in the right direction. Is that correct?
Yeah, certainly. Right. And sometimes it's mainly a tax issue. And if that's the case, again, our team has handled some international, more Asia based international issues, but I worked in the CPA world for several years, and I have lots of friends who do lots of really cool things. So awesome. I can find you something somewhere.
Awesome. Thank you. What are some leadership growth tips, tools, advice that you can share with the Lead to Greatness community to help us reach our greatest potential?
I read for the first, and you probably read this dozens of times, but it was this an article from, it must have been, I think it was 1980 something, Harvard Business Review, and it's about getting problems off your back, and when you're especially when you're dealing with people who are working for you, is making sure you don't take on other people's problems. And so that was an eye-opening thing for me, because I think as people who are used to working hard and used to solving problems, we want to solve everybody's problems, but we shouldn't. One, it's not a very good use of your time. Two, you're not developing your employees very well. And if you want them to take over someday, you better make sure that they're ready to go. You got to let them try to solve their own problems first, and then once they try to take it on, and if they run into a roadblock, you remove the roadblocks. You teach. You can teach, but you can't do. And so that's sort of the big thing that I've been taking away recently, as I've really tried to be more cognizant of my own shortcomings. In that way, I think I've gotten better at it.
Wow, that is a knowledge bomb. I love the way you say, because we can get caught up in and you see a ball drop and run over and try to grab that ball. So I really appreciate you sharing that and giving us that reminder, something that we can always, just that nugget that we can put back in our pocket that may somewhere down the line recently with COVID and all these different things that happen. Definitely thank you so much for the knowledge that you shared with us. Thank you for the tips. Thank you for the stock options and things that we can look more into. If someone wanted to connect with you and what you're doing, where should they go?
So our website's a great place, WRPwealth.com. We've written insane amounts of blogs on stock options. So if there's anything stock option you want to know more about, that blog is a great place. You can also, if you want to get into a deeper conversation, you can schedule a meeting right on the website, and we're happy to reach out. And we'll pretty much talk to anyone, I can't guarantee much, but I can guarantee that you will leave with more knowledge after you talk with me than when you have before. And maybe we don't work out, maybe it's not a good fit. That's okay. But it'll be worth your while to at least have the conversation.
Wow. Thank you, Aaron. Thank you. On behalf of the Lead to Greatness community, I want to thank you so very much for taking time out of your busy schedule and adding value to us all.
Well, it was just great to be here. I appreciate it.
And don't forget to subscribe to Lead to Greatness if this is your first time. And if this podcast was helpful to you, leave a big thumbs up. And also, I want you to check out our Marriage Coach podcast, the podcast with my wife and I. If you're on iTunes, please rate this podcast and leave a review and help get the word out. Again, thank you, Lead to Greatness Nation, for joining us on today. Looking forward to seeing you again on next week. Till then, remember, if you help others reach their greatest potential, together we can change the world. Peace. We out.